Hello, everyone. Welcome back to a new episode of One Vision, the FinTech Views. This is Theo, your host for today's episode, and I'm joined by my wonderful friends. Those of you who have been friends with the show would know all of them very, very well because these are well-known thought leaders and bankers and analysts in our FinTech world. We have Julie from Finovate. We have Tiffany from eMarketer, and we have Millicent and Tammy. Welcome to the show, ladies. Thank you for joining us. All right, so we are doing a mid-year recap. I can't believe that half a year has gone by. I had no idea what happened other than I am happy. I've seen most of you this year. We've spent some time together. I have seen United Airlines logo quite often. A lot has changed. A lot has happened. Let's unpack, starting with Finovate. Julie, what do you think? And Tiffany, you both were there a little bit.
Yeah, so Finovate Spring wrapped up a couple weeks ago, and I was there, but because I was either on stage or in front of a camera, like I had like seven obligations, I think. So I was either on stage or prepping for sessions. So I didn't get to sit through a lot of sessions, but that said, I did have a lot of good conversations. And I had a lot of people ask me about like what I thought the vibe was in fintech and financial services. Because, we came into this year thinking that we're, in fintech spring, things are going well. We had a couple of like prospective IPOs perhaps. And then all of a sudden things kind of like froze up a little bit because of economic uncertainty. So it's the economic uncertainty mixed with this regulatory freedom that kind of juxtapose each other, and people don't really know how to think or how to invest or where to put their funds. Um, so, in my opinion, and I'm sure everybody has a different perspective on this, depending on what subsector you sit in or what you see. But from what I'm seeing, it's still generally pretty positive, but very cautious still. Regulatory constraints were really top of mind at the show. And I think a lot of this was given new advancements in AI, with agentic AI being top of mind for a lot of companies. They're looking at how to invest in this space, how to place their resources, and especially when that comes to regulatory constraints, we don't want to give away or give up on regulation at all. But some companies are like, oh, it's the Wild West again. This is great. We don't have to think about regulations anymore. We can just, invest in all these new technologies, and then we'll think about the regulatory implications. So I'm kind of seeing a mix, but it seems like for the most part, companies are still putting that regulatory mindset first. And Millicent, I know you have some thoughts on this too, so I'm excited to hear you get into this later in the fall. But yeah, that was mine. Tiffany, what were your takeaways?
I thought regulations were just suggestions.
Well, yeah.
Just kidding. I was in a similar boat as you, where I didn't get an opportunity to attend any of the sessions really outside of the ones that I was in myself. But I would say what I did observe in the few that I did see was lots of conversation around AI, right? AI is still alive and thriving, but to your point, I think people are taking somewhat of a cautious approach and thinking about where it really makes sense to invest their time and their resources, and what use cases really add value to their organization, I think is one. The other one, it seemed like there was lots of conversation on where it was embedded finance. So is embedded finance, after a year of we'll call it loosely scandal, are people really ready to make investments in BaaS? And most importantly, there's a recognition, I think, in the industry that in order to remain relevant, you have to insert yourself in moments where consumers are making decisions that have financial impact. And the only way that you can do that is stepping outside of your own digital assets and starting to play in other ecosystems where consumers are already building their financial ecosystems on their own.
Tiffany, what you just said reminded me of something you've told me probably half a year ago, if I remember, on your vision of what role data can play and how different FIs, for example, I think the example you used was a mortgage company. When the first time that they contact you, they surface you a loan. And the next time you hear from them is what? Auto pay once a month. But your point at that time, and it stuck with me, was there are so many different touch points, milestones, life's moments in the middle around that FIs could have continued embed themselves in the lives of the customers, that they can offer more value, create more of those moments instead of just the one-off.
Yeah. So we wrote a report last year called The Bank in 2030, where we talked about how banks needed to move away from product-centric thinking to customer-centric thinking. And it's no longer about trying to engage them into products and services. It's about building experiences around life stage. And so to your point, if you think about home ownership, most people don't know what it takes to buy a home, right? How do you help educate them on the home ownership, how to actually even buy a home? And then once you do buy their home, how do you actually add value in the homeownership experience beyond what you just said, which is you make your payment. And I don't even know if I'd even call that an interaction, because like it's, you set it and forget it. Like there's no conversation with someone until you sell your home. But if you build around life stage and you start thinking about helping them buy a home, helping them insure a home, helping them learn what it means to maintain that home, and then manage that home as an asset, you've now created all these different touch points with the consumer that you didn't have before. And it becomes your opportunity to show up as a true financial partner in a journey versus just taking their monthly payment every month. How do you provide guidance in each one of those phases?
I love that example so much because it's something that we can all relate to, and it's something that the data is available as a matter of us harnessing it and making use of it. Um, and to your point, to both of your points, I unfortunately missed out the first 2 days of Innovate. So this is the first time, gosh, in a long time that I missed all the demos. But I did go back and watch some of them. Um, and I was at my own AI track, which has always been my favorite. We've been chairing it since 2020. One of the things I do notice, to both of what Julie, you and Tiffany said, is there's a lot of talk about AI, but then finally this year is when I see more concrete examples of organizations actually having used it. And they come back and bring the learnings back. They said, well, it's no longer just a POC or experiment. This is what we actually did. This is the results that we saw. And here is the next step that we want to do more of. And these use cases extend beyond putting a chatbot in a call center. So that gets me more excited. So for example, Better was on the panel and they were talking about using it for mortgage. And those things, even though it sounds to some extent just a low hanging fruit, but it does show maturity of the use of the technology in our industry, and guiding towards what's next. So that's, I think, encouraging. I guess it's better than using a chatbot. I don't know.
Yeah.
So let's stay with the first half year. Beyond Finovate Spring, what things surprised us the most in the last 6 months? Millicent, you were just talking earlier before we started the show. You were talking to Julie about regulations, about agents, about things that caught your eye.
Yeah, another thing that's caught my eye is, so let's see, I think this was last month. So credit unions have been acquiring banks, and there's been an upward trend for that. So Marion and Polk School Credit Union, I don't even know where that is, but acquired Lewis and Clark Bank. And they're like this is all in Oregon. And that's the fourth announced acquisition in 2025. In 2024, there was 22 of them. In 2023, 11. In 2022, 16. So anyway, there's just a super interesting trend upwards of that. And I think with the continued uncertainty with bank stocks, just in general, I think we're going to see more and more of these. But what's super interesting to me is how credit unions aren't, because they're actually nonprofits by nature, they're not really regulated the same way as all the banks that they're acquiring. So I'm just super curious about how something's gonna come to a head with that. Anyways, yeah. And I think there's going to be a lot, just in general, a lot more bank acquisitions in general, just in 2025.
What about everything else that's going around deregulation? Because I do wonder, and I have not followed as closely as I wanted to. I do wonder what's going to happen with certain aspect of how our industry perceive regulation will go and not go, and what they could get into trouble and not get into trouble, versus what things they would do, and versus what is the state of credit union. How is that model going to change going forward?
Yeah, I don't know. That's why I'm super curious to see. I kind of feel like every bank I've talked to, which obviously isn't everyone, but a lot of the smaller ones, like they're not changing anything in this new wave of deregulation
Mhm.
because they don't want to make, I think I've said this before, they've, taken up to 20 plus years to put in all these types of processes and rules and things just to comply. And just because all of a sudden in the last 6 months there's deregulation doesn't mean they're just going to like not do it anymore. So I think I think the ones I've spoken to are taking a wait and see. Um, and there's a credit union association meeting coming up, and I'm super curious to try to get to that to hear like what they're going to do.
Mhm.
So I'm not sure.
Not either. Tammy, what about you?
Yeah, I just, kind of incidentally, I've heard that there's a lot of questions around the appointments or the removals of key members of the of the NCUA, um, the ones that were really advocating for keeping the credit union movement intact. And guys, like, I am not a credit union expert. I've only worked with credit unions for the last maybe like 10 years of my career. So I'm really more of a community banking person, but I do work with credit unions now and have recently. And this is a huge deal for them because they're two of the three people on the panel were like pro credit union and not really pro bank, if that makes sense. And the person that's left is very pro bank and kind of anti credit union. So there is a lot of real uncertainty around that for credit unions, which could in fact maybe drive some more of that acquisition activity, right? Because you could choose to be regulated by the bank entity, right? Like you become a bank instead of staying as a credit union. Of course, you would lose a lot of the advantages, right? The nonprofit gives you tax, um, a situation with taxes that is much more favorable. And frankly, the regulatory environment is far better for credit unions as well. There's a lot of advantages there, right? So from my friends in the credit union industry, they're really worried about the long-term implications for the quote unquote, the movement, that's what they call it,
Oh,
in the long term based on this, right? Because, I don't believe that this administration is a friend to credit unions necessarily, right? This guy does all his banking with the really big banks. So not really somebody who's looking out for community financial institutions, but specifically not credit unions.
I
I just
also
want to
wonder if
know.
some of it's driven. Oh, sorry, Tiffany.
I was just going to say, I also just wonder, like, so your example was a bank, right? And a credit union. And I feel like they've got two very different strategies and approaches in terms of how they serve their customers. So I'm just curious, like, how is that going to go? Like, if you're going to merge together, like, you got the
Yeah,
one to your
I've
point,
been
Tammy,
through a
like,
couple of these with clients. And actually, the one that you mentioned, Lewis and Clark, that used to be a client of mine. But what they are going after, at least this is my experience with credit unions that acquire a bank, they're going after their commercial base, right?
Mhm.
So they want to get a foothold in commercial banking, and they do not have it and cannot have had it. Uh, Kind of in the prior many years, they didn't even offer anything commercially, right? But now they're moving into just kind of tacitly putting their toes in commercial banking, like treasury management, making loans, but keeping the deposits at the credit union, right? What you've had to do previously is you could make a loan, but the deposits had to go elsewhere because you had no treasury management opportunity, no treasury management in the tech stack for the credit union. So they're really moving into, I want to acquire those lenders, right? And I want to acquire those assets. So I that's at least my belief on the strategy there.
Okay.
Yeah,
Thanks.
I also was wondering if part of it is they're trying to get some more liquidity to be able to invest in better technology solutions. Like, Julie, I don't know if you know First Citizens Bank of Butte. They just got acquired by Frontier Credit Union.
Oh, interesting. No, I'm not familiar. Butte's about 5 hours south of me.
Oh, really? Yeah. So, because there's a lot of, yeah, I think there's a lot of credit unions that are trying to be super tech forward and trying to figure out, because they're nonprofits, they don't have a ton of extra cash to use to capitalize those types of advancements.
That makes sense. That's smart. Tell me what else is going on with your fraud world? Because you've been busy making the rounds.
I have been busy. I've been traveling a lot more recently. I got to speak at a meeting last week, and I was very surprised to discuss with a banker that was there the strategy that her community bank adopted recently based on the fraud that they were experiencing. This bank, it's in the Southeast. It's about a $2 billion institution with a number of branches, and they've decided to turn off their digital account opening solution because of fraud. So rather than,
Wow.
I guess, take the risk and mitigate the risk through technology, they're electing instead to just not have that channel open and only rely, I guess, on their branches and people coming to them physically. I was shocked, you guys. I did not know that was something that folks would do in this time period.
And I'm assuming the fraud that was happening was fraudulent account opening?
Yeah, that's exactly what we were talking about. We weren't talking about loans, but I don't even think they have an option for that.
Yeah.
So strictly deposit account opening. Yeah.
Oh boy.
Which has always been a concern, right? Online fraud rates are always higher than the other channels.
They are.
So it's not news.
It's good for my business. I'll just be frank about that. Like, we are in the business of preventing that. But it is shocking to me that you would just actually elect to, just be like, nah, we're not gonna do that. Especially right now, guys, where we're thinking, okay, that like the current environment of deregulation is going to open up more fintechs to the space, right? So they're going to be competing for those same deposit dollars that our community banks are competing for. And that means with less regulation, right? So that means it's going to get that much more difficult to bring in those local deposits, especially without a digital self-service channel, right? I don't understand it. I would just go to the next one that showed up in my list, or the next one I knew, because I know financial institutions. I wouldn't put up with that as a consumer. So it's surprising. It's just such a strategy, conservative strategy, I'll say.
Yeah. Are they a publicly listed bank, Tammy?
They are privately owned. Okay. They are family owned.
Okay.
So they can do, whatever they want, I guess. But right?
Decision. Right. That's interesting. Yeah.
Did they make it more of like a temporary fix, or is it more of like, this is our strategy going forward? Like,
I know it's been an existing strategy for a while, is what she said.
Wow.
And, but she was interested in what we do. So perhaps, they can see a way forward if they get the right pieces in place. But for me to just, if I was in operations, where I always like sort of imagine myself in a bank based on previous experience, I wouldn't just turn something off. I'd put the guidelines in place for it to perhaps work in a different way, right? Like, there's all kinds of stuff you can put on a new account to be like, we're not letting you transact on this for a certain number of days, know, and maybe you're going to lose a couple $100 on a brand new DDA, but it wouldn't be beyond that, right? So it's a strange choice, but based on the conversation, and this was like at the table during the conference, there were other bankers around that were like, yeah, we're talking about doing that too. So what didn't seem like it was isolated to only this institution. There were several people that were like, oh yeah, the fraud is just, you know how institutions will be like, we're turning off Zelle because it's too much fraud, same kind of vibe around this. Wow. I was shocked.
I am shocked because just recently I was actually at a tech event where I built my own AI agent to help a small bank open up account digitally. It was fascinating. Now, obviously, it was a fictitious bank. But the use case I was thinking about is, how oftentimes small business owners, they have a hard time finding time to open up bank accounts. Smaller banks have a hard time servicing them just because of, it needs manpower, it's process heavy, resource heavy, and, the time that you have is limited. And so that was a perfect use case, I thought, would be for an AI agent to work on the front end of these small institutions. And it was fascinating. They already have a lot of the prompts and the use cases preloaded in the financial services cloud. So I was able to verbally describe to the AI agent, the bot, that, hey, this is the pain point. Imagine, I'm this credit union and I want to service my community, small business owners. They don't have enough time. We don't have enough time. We need to think about, what are the things we need to check in order to create the account for them, what documents and information they need to fetch and bring over. I just verbally described part of the scenario with the bot. And next thing you know, within 5 minutes, I saw a list of all the prompts and described the jobs to be done, described what the role this particular agent needs to do. And it has everything laid out. I had never seen anything like this before. And I was thinking, wow, if we can take that one step further, and probably this could be a game changer for institutions that need to work across border, because that can give them information on what to do and service different communities. It can be something for, the mid-size to think about putting in new features. It's much easier to do than having to code everything yourself. Now we still have all the data layer and everything that we need to sort out, but it just is every single little improvement that we can do. It's helpful. But it was truly the first time when we think about artificial intelligence and the whole hype about AI agents. I was actually able to see it in action, and that was really cool. Julie, I think you would have liked that.
I know. So I had a keynote on AI agents at Finovate Spring, and I should actually at some point give you that keynote, and because I'd love your feedback on it. I'd love to kind of riff off of that. But I'm so jealous you got to build your own AI agent. That's exciting.
It was a lot of fun. It was also the same time when we heard from Google, the recent announcement. Google made a bunch of releases on AI. They had one that they talked about. I don't know if you guys caught that. To be able to in real time translate the language.
Wow.
That's wild. So imagine, like, I think it's very limited as to the type of languages, but let's say in 3 to 5 years, we'll be on stage. We can have people from different regions, and they can be at Finovate talking about their experience on digital account opening on their own language, and we can all understand each other. That's kind of wild. It was cool.
It is.
So what else is going on? What else caught your eye, Tiffany?
In the first half of the year, I'm actually going to talk about something that spin off of what Tammy just said. So one of the things that that we said would happen based on a report that we publish every year is that banks would start betting big on branches as a growth engine and a financial hub. So maybe it's possible that the person that you talked to read this report, and maybe that is what they've decided to do. I'm just kidding.
I should put that as the show title. See what people say.
I think we could do that.
Right?
Let's do it.
This is the future.
It's digital. It's time.
It's time. I think, all kidding aside, branches still are a pretty big growth engine for most financial institutions. And even if you start to think about the top reasons that customers choose banks for, that one of the top reasons still is having a branch near them. It's like at 44% of customers indicate that that is still really important to them. But what I think will happen is, when I say about a growth engine, I'm not talking about like a traditional branch. I think we're really going to start to move towards financial hubs that serve diverse needs. So whether it is sort of the unbanked consumers or underbanked people that need perhaps a little bit more handholding or financial education, having things like financial literacy seminars and things in the branch or workshops to help with that. I think there'll also be a play for emerging affluent there as well, where we'll start to see that financial institutions will lean into having advice centers. And then those advice centers also supporting things like homeownership and other, we'll call it needs-based solutions. So I'd say that is sort of a big one. And then I think I've heard a lot about universal bankers as well, that financial institutions are moving towards having universal bankers in a branch. And so not specializing in one specific function in a branch, but having them be more generalists so that they can cover a wider variety of needs.
I like your point, Tiffany, about the advice centers. That's a trend I've seen in Asia the past few years. More and more of the quote unquote regular bank branches have been replaced by what they call premier banking services. It serves just those customers that have more than X high net worth. And they go in there, they have really nice services. The branches are so chic and beautiful, and you get treated like royalty. And, you know, they give advice, they do all kinds of things. But they are segregated in a way in really nice neighborhoods, and they serve just the affluent. So that was definitely a trend I've seen in Asia.
So like private banking almost, would you call it?
Almost, they call it premier banking. So it's like you know, it's like a bank account that you and I would have, except that, you know, a few more zeros. And they can take really good care of you. It's fascinating because I actually even hear my mom and dad say, "Oh yeah, you know, they're closing this branch and they're replacing with Premier Banking branch." HSBC did that. A few others did that. Actually, even Standard Charter, which is one of the largest banks in Hong Kong, they came up with a digital banking brand called Mox, which I have. It's just you can only bank on the phone or mobile, but they are thinking about opening in branches within the territory to serve as wealth management advice. So it is a trend. Go where the money goes, I guess.
Yeah.
Which, when we talk about money, we talk about trends. Julie, let's talk about stable coins.
I know, I'm excited to talk about this. I know. So, well, you asked us, what we thought was most surprising in 2025 and the most surprising trend in the first half of this year. And stablecoins has to be the number one. I mean, specifically the growth of stablecoins, like the speed that like companies are getting their feet underneath them. That's crazy. So the stablecoin market capitalization has exceeded $220 billion in 2025 already. And that's up from $4 billion in 2020. So like we're there, like it's coming. And like the exciting part of stablecoins for me is not just like the ability to save costs and like the speed of it, because it's all on chain. And so both of those obviously are really important when it comes to cross-border payments. But the programmability aspect of stablecoins are going to be huge, especially when it comes to like smart contracts, automation. And when you think about combining it with something like an AI agent, Theo, like I hate to use the word synergies because people make fun of that word, but the synergies are going to be just amazing. Just thinking about how we can transform payments based on that, just in like micro payments. So there'll be a lot of new business models I think we'll see rise up in the second half of this year. Based on the rise of stablecoins, we're starting to see regulation forming not only in the US, but also over in the UK with MiCA. So yeah, there's so much opportunity, and not just the opportunity, but with regulation coming and supporting that opportunity as well. It's making more of a level playing field for banks, like traditional banks who would perhaps be a little bit more fearful of playing in that space. Now it makes it more approachable for them as well. So I'm excited to see what happens.
Approachable is an interesting word to use because I remember a couple of months ago when you and I talked, one of the questions that we have is how can we make it usable and approachable for general consumers, giving them the on-ramp that they can actually find a way to transact and use this. And ever since then, I think part of the answer has been solved, right? We saw the partnership between MoonPay and MasterCard, for example, giving them a way to use the assets, and I think a lot more is going to come. It's fascinating, but it still brings me back to our dinner in San Diego with the 9 credit cards, Tiffany. We took that picture. It was a stack of 9 credit cards.
Oh,
Eventually, we'll solve that. All right, before we close out, let's talk about what do we look forward to the second half of the new year before we all break for the summer. Who wants to go first? Julie, what do you look forward to?
Well, I'm just going to say stable coins again. So,
So
well,
you're going to come up with a huge report and tell us where
oh,
stablecoin is going to go, right? Or are you going to give a keynote at Finovate Fall for stablecoin?
oh, maybe I should. Yeah, if Katie lets me, I'll do that. Yeah, that sounds like fun.
Go
Yeah,
for it.
Can I ask you a quick question about stablecoins, since this is like your jam here? Because I get this question occasionally, and only because of my leftover kind of having been associated with a Bitcoin company. But occasionally I'll talk to somebody who knew me from then, and they'll be like, is the Treasury going to issue a stable coin pegged to the dollar? What does the future hold on that? What are your thoughts? Do you see that happening?
So I don't think so. I've heard no around that. But I don't know. I mean, yeah, I don't know if the incentives are there really. But I guess we'll see how the private markets kind of develop each their own stable coins, and who comes up with their own, and then, which ones are adopted for which use cases. Yeah, I could see it. It's not beyond, the realm.
Especially with the current administration and their love of all things coin, right? So we could really, I can see it more happening now than it would have happened 2 years ago or 5 years ago, right? Like
or
it
even
makes
half a year ago.
or
Yeah.
even half a year ago.
Well, so
I
I
don't
would
know.
almost,
I would have
almost
said
say-
no a year ago when somebody asked me, but now I'm like, maybe.
But I would almost say the opposite, because, the new administration, if that's what we're calling him, has his own like company of
True.
crypto, so why would he want to make a
right.
publicly available one if he wants to incentivize people and like racism?
Unless someone tells him to do it, like Jamie Dimon or somebody like that, right? Like those are people who giving him some advice. So it's an interesting thought, but I just thought I would ask real quick, since I had some people on here who were.
No, yeah, I'm glad you did. I mean, the opportunity is certainly there, and it's still early days. So yeah.
Yeah, I mean, the big banks are exploring interoperable stable coins. So there's a lot that could change over the summer before we all come back. Yeah, Tiffany, what do you look forward to the rest of the year?
Is also going to create a launching pad to turn in crypto investors into payers, right? Because right now they're just investing and there isn't really a way for them to spend the money. But once you start creating the capabilities to allow them to buy things with crypto, I think we forecasted at the end of this year that there would be 5.1 million US crypto payment users. And by 2026, that's expected to jump up to 7.1 million.
Wow.
I mean, I just want to see what the impact of this crypto dinner has on everything.
Let me tell you, nothing. Empty promises.
Yeah.
I think, Millicent, that was a rhetorical question, right?
Yes.
All right. I know what I'm looking forward to after the summer. It's Finovate Fall. We're all going back to New York, and then we'll see what happens. I have a prediction. I think we're still going to have AI on the agenda. I think we're going to have stable coins on the agenda, Julie. And we might have a few topics around how do we navigate the daily changing uncertainties and priorities in financial services. And Millicent, nothing might actually happen because, precisely to what you said earlier, banks and financial institutions have spent so much time making sure that they abide to the regulations. They're not going to dismantle everything overnight, not at the whims of what could happen next. Just
And
a
what I
thought.
am interested in the fall is how the number of banking as a service partnerships with banks change.
Huh.
Just
Okay.
because so many have been under scrutiny, but then so many are still pursuing it. Really, it's a weird. I feel like it's a super weird time for those right now.
Yeah.
Do you think it's going to go up? Because I think it's going to go up.
I think you do think it's going to go up?
I
I don't
do. I
know.
feel like it's a Wild West right now. They're like, oh, we've been released.
But then so many community banks that looked to that to be like their huge step in innovation are getting their hands slapped.
Yeah.
Yeah, I don't think you can do it with an unreliable partner. I'll just say that. But I do think for the ones that have gone through the process and have proven that they can get through an exam with a financial institution,
Yeah.
those ones are probably going to see some explosive growth this year. That's my thought. I could be wrong.
Yeah, that makes sense. That makes sense.
I think they're going to scale back on the number of providers that they partner with. So I think
Yes.
we're going to start to see some winners emerge.
Yeah, that makes sense.
But I think maybe if they were dabbling with like 3 or 4, they might go down to like 1.
Any predictions on fintech IPOs? That's the
Hmm.
one thing we had not talked about. I mean, we saw Chime,
Saw Chime, yeah.
right?
Circle
So
today. Circle today.
Circle. Oh, Circle. Okay. All right.
Yeah, they
So
put theirs
maybe
up.
the market is coming back. I mean, there is no lack of capital, right? And there's
Right.
people need to deploy it. People need to do something with it. And we might see more IPOs. It will be interesting.
Mhm.
All right. Well, that gives us lots to think about until we come back in the summer. Until then, thank you so much, Julie, Tiffany, Tammy, and Millicent, for joining us on the show. And for the rest of the listeners, thank you so much for joining us for another episode of One Vision, where we regroup and have the last party before summer. Until then, we'll talk to you next time.